I'm Keith McCullough. Welcome back. This is the last one. I've gone 9 in a row. Last but not least, I like to think of you, Mike, as a man for all markets. Like you're just, you're like me. We've been grinding away at this for a long, long time. I wanted to have you go last because I think you've watched at least some of these. Maybe you've watched all of them. I don't know. But there's like I try to come away with what the hell do I do now, and on the COVID topic in particular, I think you're widely known here on the Hedgeye channel as having nailed it. On the we're coming into this now. I think I certainly need to know how we're coming out of it, and I think you have an opinion on that.
Oh, absolutely. First of all, I should say troglodytes unite.
Troglodytes unite. I love that. Love that.
So on a background for me, I wanted to say a few words because a lot of folks don't realize where I came from, what I've done. I started out about 25 years ago as a virologist working on gene therapeutics. And I worked on that for a number of years, wore a lot of hats, just like you, in a small business, and discovered that this job existed. I had no idea. And as soon as I saw it, I said, my God, this is what I was supposed to do. I always loved science. I loved making drugs, creating drugs, thinking up drugs, from the whiteboard to the human. And I was fortunate enough to get 2 of my drugs into the clinic. But then I discovered this existed, and I said, this is it. So I went to business school, and then I ended up on Wall Street as the head of healthcare at a mutual fund called Oppenheimer Fund. And post that, I've been in hedge funds for about the past 20 years. And predominantly Citadel and Millennium for most of my time. And I just left, and that's why I can speak on the television and speak publicly. I essentially have been under a CBA for the past 15 years, and I haven't been able. So I'm sort of like the healthcare manager, and I ran a large group and a large book, as you know, through many, many markets for most of the past 20 years. And I'm sort of the guy that everybody on the inside knows who I am, but nobody in the actual real world has no idea who I am. So this is part of me being off of that CDA. I can actually talk to you and the rest of the world about what's going on. And hopefully It's a good service to you and your client. Okay, so let's dive right in. We have a lot to talk about on COVID, how it's going to work out, what the trades are, the election, how it's going to work out. Wow, it's going to be a tough one, and what the trades are. And those are really the 2 big things that we have to talk about. So first on COVID, right now we have about 60,000 cases rolling in a day. That's actually a bit better than I thought. The states have done an incredible job with the lockdown. When we talked last time, I said we're going to hit a new high in COVID infection rate, and we're going to blow through 100,000 a day. Yep. And we didn't. And the reason why we didn't is the states really got onto their job. And I was just so stunned that they did because, I generally view government officials as feckless twits, and they actually took action, right? Exactly. So they took action, and they really did a great job net and locking it down. And so kudos to them. I really didn't think they had it in them. And that bought us some time, the time now. In the next 2 weeks, we are going to see the first vaccine trial readout. And the first one we're going to see is from Pfizer Biotech. It's a combination of 2 companies working together. I think it's going to be positive. I think it's probably 80% chance that it's going to be positive, and we are going to have the first vaccine. I think that we have 5 vaccines that are going to read out between here and January. And that is going to be Pfizer, Moderna, Novavax, AstraZeneca, and Johnson & Johnson, yep, who have vaccines. I think Astra and Johnny John have troubled vaccines. They based them upon a vector called the adenovirus. That's something that I worked a lot with 20 years ago. And the human body doesn't like it very much. So the other ones are using an mRNA vector, but they're all doing the same thing. They're making proteins along the spike protein on the CCP19 virus. That's a Chinese Communist Party 19 virus. And they are all likely going to work. They're very classical. We're making an antigen. Your body is attacking that antigen and making you immune from that antigen when the virus comes into your body. So you'll likely have memory T cells and all the classical sort of vaccination events. And it's probably about an 80% chance that it reads out positive in the next 2 weeks. And then 3 weeks after that, we're going to have a readout from Moderna, and that too will likely be positive. The side effects on these vaccines are pretty nominal, mostly around injection site reactions and fever in about 20 to 30% of patients. And it's not a fever that's going to take you down. You're going to be feverish for a day, and then that'll be it. So I think that the vaccines are going to be very, very successful. And that's actually going to change everything very quickly because we'll be looking at things getting back to much more normal in the US about a year after that. But as you know, stocks will see fruit and stocks will start to react immediately. And so the trade is, for all your listeners, is long garbage. Garbage meaning Carnival Cruise Lines, Royal, everything that looks garbage. Like it's like, yeah.
The stuff that's gotten hammered, yeah.
Because these people haven't been, these people, first of all these Dave & Buster's, cake, gaming, leisure, hotels, so many of them like Carnival and others are going to go bankrupt in the middle of next year unless bookings explode, and then they'll get the cash to carry them through. And I think that's exactly what's going to happen. We're going to get distribution of the vaccine beginning in probably late November and December. It'll be one of the fastest approvals we've ever seen. It'll go mostly to healthcare workers through the end of the year, but then it's going to be Jan, Feb, March to everyone else, largely in America first. And many of these companies already have big contracts with governments just to deliver supply when it becomes approved. So I think the trade is a dash for trash, and it's going to be a violent one. It should be a violent one because you'll be looking at a company like Carnival Cruise Lines that's trading around a 52-week low and down a lot. And yes, they've diluted themselves. Yes, they've taken on more debt. Yes, it is not great, but it's not going to go bankrupt if the vaccines are positive. And it probably has a triple in its future between here and May.
Yeah, that's
an example of how the trade is going to be.
Well, the trade, to get a good trade, you have to have the setup, and this is what a lot of people miss that don't look at the world the way that we do. So you have these, at least what I would characterize as the most recent move lower in hotel stocks and dumpster divers, like the names that you're talking about, Carnival Cruise, Norwegian Cruise, et cetera. You have to get them to a place where people think that it's not going to get any better. So we have basically, I guess on your timeline, 2 weeks. That's also an interesting date, and we'll talk about the election next. But we have, these things, like these are basically my shorts, right? I mean, these are names that every time they go up, I short them. And every time they go down, I cover them. And we're in that they're going down again part of the movie. When you use a timeline of, you said May of next year, right? I mean, so we're using, like a real holding period. This isn't a day trade. That's what you said, right? You said May of next year?
Well, yeah, but for instance, in the cruise lines, what will happen is people are going to get vaccinated and they're going to immediately book a cruise.
Exactly. I mean,
so the bookings are going to explode.
Or not cancel the one that they're about to cancel.
All that management has to say is, oh, and by the way, bookings are off the hook. Good night. That'll be it. They don't have to raise capital again, and the stock tripled.
So what's what's the timeline between news on Pfizer, I think you said, and Moderna, and people having that confidence, or is it just, do you think it's just the headline? For example, Moderna's stock, not shockingly, based on, probably what you just said, ripped yesterday, back towards 75 after going dumpster diving towards 55 and went 95, 55, 75. People don't know what to do with that, right? But yeah.
Well, that was largely because Johnny John and AstraZeneca ran into hiccups because they're using an adenovirus vector.
Okay.
So they ran potentially viable players in the game, and that'll be Pfizer, Moderna, and potentially Novavax in January.
Okay.
So, and most of these companies already has, Moderna has probably around $10 billion minimum of locked up deliveries, for example. And we don't know what the profit margins are going to look like, but that's kind of just the beginning of what they're going to do. So I understand the enthusiasm there, but I should urge everybody that that doesn't mean that the virus goes away. There's still going to be a very, very large tail. We're just not going to get everybody vaccinated. I think in America, we might only see 30, 40 million that get vaccinated. And you add that to the 25 million or so who have already gotten the virus, and then you get a nice herd immunity. But you're still going to have 10, 20, 30,000 patients getting infected a day. Mm-hmm. And the only play for that, in my view, to capture that tail is a little Swiss company called Molecular Partners.
Right.
And Molecular Partners has a antibody cocktail to treat the president in a short period of time. And that's largely what I would expect from this. You're introducing antibodies to your body so that it can target the virus much more effectively and quickly. And Molecular Partners is the only one that has a subcutaneous injection. And what that means is that when you go to your doctor, you get diagnosed with COVID, you feel like crap, and now we can just put a shot in your arm, very much like a flu shot. And I'm not sure if it's going to be intramuscular or sub-Q. It doesn't really matter because a flu shot is intramuscular. And that'll be it. You go home, quarantine for 2 weeks, you're going to feel a hell of a lot better in 6 days. And I think that when we see the Regeneron data, ultimately, I think deaths are going to be way, way, way down. You're basically going to be taking the extreme cases off the table for most people. Mm-hmm. And that's something that everybody can live with. So Molecular Partners is the only play that is going to be in every single doctor's office in America, and probably throughout Europe, and probably elsewhere around the globe. Tiny company, $500 million market cap. Molecular Partners, it trades on the Swiss exchange. I own some, so I should make that disclosure. In fact, I own a lot of stock. So basically everything that we'll talk about, even my setup right now for my cruise lines is I'm long Jan calls mm-hmm. for most of them. Mm-hmm.
And that's a good way to play it, particularly when you have, when you think about duration mismatch is what we talk about a lot at Hedgeye. So we have currently the last 3 days, for example, the market gives you what you call, or I would call a quad four scare. So you get a dollar up move, you get bond yields down, people are selling stocks, the shitty stocks are going down alongside the ones that everybody owns. And then you're like trying to get to, like in my model, as you know, Mike, by Q1, it's probably going to be early in Q1, the world's going to, at least the market's most likely going to realize that we're definitively in quad two. Now, in quad two, you'd absolutely buy every single thing that you just said. You basically, I'd buy all my shorts and I'd short all my longs. And that's...
What it might be to begin with is just everything goes up. It's just that all these garbage stocks go up a hell of a lot more. Yeah, and then people start thinking as we turn to January and say, well, how do I ever get paid being long Teladoc or Zoom or Peloton or something like that?
Yeah, from here.
So, and then that'll be it. And so there's great trades. So this is what I do at a hedge fund, is that I'm looking for exactly that sort of seismic shift, a data point that has to make everybody reconsider. Yep. And I think that's what we're coming right upon. I'm actually really surprised that things haven't started to front run it yet. But I suppose I shouldn't be, because the market is always right and it's always wrong. So it's going to change, and it'll just be one day you walk in, might be tomorrow, and the move starts happening.
Mm-hmm. Well, I mean that's what I mean by the move has to start from a certain place. The lower the dumpster diving stuff goes, or the lower the election, big time in the middle of the night. So on that point, you have thoughts on the election. How do you want to play that up?
So I talked to my guys in DC, and I know that the general polling data is pretty crappy, but for Republicans, that is. And I've never seen, I'll give you an example. I had a conversation with my son last night. He's 13 years old. We're coming back from go-kart practice. He's a champion go-karter, And so he's like, so why does Mike Bloomberg, why is he going out and he's beating up on Trump? And we were listening to a pretty adverse radio broadcast against Trump on Bloomberg Radio. And I said, well, think about it. The one place where Bloomberg is not is China. And that's an unbelievably huge market. And so he is going to take great efforts and great lengths to thwart Trump and support whoever the other guy is. Because I was looking at the spending. Bloomberg has spent over $1 billion now to unseat Trump, which dwarfs Biden's campaign too on spend. So there's a lot of effort to get this guy out, and it's about money. It's always about money. The guy wants to expand huge in China. So there it is. Trump's anti-China, and that may not happen. And so he's not their guy. So there's a whole incredible number of factors and people and interests that are against Trump. However, the internal polling that I hear on the Senate side and the presidential side is that it is much, much, much closer. And in some of those polls in those battleground states, especially around the Senate, it looks like the Republicans are going to hold the Senate. And that would be very good for stocks, no matter who the president is. If the Senate holds Republican, that means that the new taxes that Biden wants put in can't happen. And that's awesome, because we're going to have stimulus, big stimulus, and no tax hike. And that is very, very, very good for stocks. A Trump win is extremely good for stocks. And the biggest risk to stocks, at least in the intermediate term, is a blue wave, because we'll get an incredible amount of stimulus. I expect us to have 2 major stimulus packages. One is going to be COVID related. And then the other one is going to be a Green New Deal. At least that's what they'll call it.
Yeah.
And that'll be in the spring of next year. And it will actually coincide with tax hikes. I don't know if they're going to be retroactive tax hikes or they'll be phased in. I think they're going to phase them in. And the reason why is to basically keep stocks up. If you boil the toad slowly, then it all seems to work out. So I think that that's going to be the trade. So I think all of the outcomes are actually good for stocks from here, say on the desk. A trade from here to March, that's 3 careers from now. So I am really only interested. Exactly, right? And my guys, they quote me on it all the time. That's 3 careers from now.
Yeah.
So it's between here and January. And I think that stocks are going to be higher, and in many cases, a lot higher. And part of that reason is, and your last guest talked about this an awful lot, is that there's nowhere to go. Bonds are uninvestable. When you look at your real rate of return, I mean, we're almost at the point that your real rate of return in corporate bonds is negative. So there's just nowhere to go. There's nowhere to go in Japan, but stocks, throughout Europe, but stocks. And so if they can give us an excuse, rationale, stimulus, doing the same thing has got to go somewhere, and it is going to go into stocks.
See, I don't agree with that fully. I mean, I agree that there are certain things to buy, certain stocks to buy depending on what quadrant we're in. But, people, you can go to commodities. I mean, that's a huge thing. Like I call it, TAS, or there are alternatives to SPYs. Because that's an asset class that's been shot for dead, like for a decade. And if we get like some of the scenarios you just outlined and the dollar is going down, commodities are going to go up big time. They already started to. I think was their local low, their deflationary low back in May of this year. So by the time we get to May of next year, think about it, Mike. You're going to have an oil price year over year when you model it of a negative oil price in Q2 of last year to something that's not different ways. What I find is that people that don't like kind of have a go anywhere strategy, aren't as comfortable with that because look, it's not what they do, and it's totally fine. But it doesn't mean that the asset class of commodities in particular, especially if you have the Green Deal thing. The Green Deal, we walked through it yesterday. I don't know if you watched, with Stefan and Josh Crum. He looked like a troglodyte. He would be perfect with us. He would look like a troglodyte caveman guy, and that's a big theme. All the different purchases that need to be made in a sector, commodities, that's been underinvested in for a decade now. So that's the only quibble I'd have with that. I don't know if you disagree or not.
I actually think what we're witnessing is that Biden might be the winner here. So what would be the trade? They're going to do a big infrastructure project, call it green, and how do I trade that?
Yep.
And it just happens to be a lot of negative momentum stuff that didn't have any, so once you're out of sellers, there's only one direction to go. So I think they're hedging themselves. So I think that that's an obvious trade. And then the next piece will be all the entertainment, gaming, leisure, so forth, as we have a return to consumption in that area.
Well, to get the market to like a much higher level, when you say like stocks will be up, I mean, you just have a broader participation, right? I mean, you get all the shit to go up. Let's start with that, which is what you already said, and then you have. I mean,
that's
you look
why
at
stocks will be higher.
There are many market caps, former market caps, like Freeport-McMoRan, just to use a good example. CAT still looks bulletproof. Deere. These are major ways to play commodity. The cycle of commodities that I'm looking for. Once we get through this last part of disinflationary fear. But again, the market, that would be much healthier for the market to have a broadening of breadth and depth to the market in different subsectors that have been shot for dead.
And I just believe it's very, very difficult to get stocks down because there's really nowhere else to go. Between you have the passive cash going in there and retail, and there's more stimulus is more checks in the pocket, and it goes right into the stock market. So even though I do agree with you, we're teetering on this quad 4 environment, I believe that the Mr. Market, as you like to call it, is going to look through it.
Mm-hmm. Yeah, I mean, well, to look through it, from certain levels is easy to see. It's just like at what point, like you said, 3 careers from now, do you make these decisions? And that's it's an important thing to think about. So thanks for making me think about that. On the other thing that I'm not totally sure on what you said there, I'm absolutely not sure that a blue wave is great for stocks. I mean, I was talking about that the other day, rattling off. On Monday, stocks were going up allegedly because COVID's back and that's good for tech. Because it's, the vaccine is here, it's coming. You've already walked through that part. And because a blue wave is good for stocks, which nobody would have said 6 months ago. So that's an interesting one. And you have you're saying if the Senate's red, correct? That's basically what you said. That would be a better outcome.
That would be I will be thrilled. One of the problems, though, is about this outcome is we may not know the actual outcome for many of these elections for about 2 weeks.
Right, really
and
important
that's
point.
Just going to be difficult.
Well, that's difficult for
That's just going to be difficult.
It's hard to see. There's 2 volatilities I'd be thinking about there of VIX and Vixen kind, which we know, but the volatility of the other troglodytes, the humans. that could be like Jim Chanos just said that he sees a lot of value in pitchforks and torches. Do you think that contested election, or how have you thought that risk through?
Well, oh God. Actually, I'm not worried about a contested presidential election.
Okay.
Because one way or another, we're going to have a president, no matter what. And what I'm really keyed in on, do the Republicans hold the Senate? Because then nothing bad is going to get done. That's my view on it. And when I say bad, I mean the likes of AOC and Pelosi and so forth having a cooperating president and able to get everything that they want through. And you look, we're at a point right now in a macro sense, and I know we're at a point that nobody has ever seen before, where the printing cannot stop. The US is insolvent. Japan is insolvent. Europe is insolvent on a sovereign debt level. And we're at the point where we just have to make up excuses to keep printing so that there isn't a run on the US Treasury and other treasuries. And so it just can't. Look, we're going to make up all kinds of excuses. And I just call it the Fed's word salad, just to basically fool everybody into why they're printing money. Oh, we're not hitting our inflation rate. Oh, we're going to run hot, right? We're going to run hot for 3, 4, 5 years. Well, think about it. Why are we going to run hot for 3, 4, 5 years? Because we ran cold before? No, it's not. It's because they're all looking at the state balance sheets, all right? So as soon as we hit 24, it's probably 23, 4, 5, 6. That's when the absolute shit hits the fan. New York, New Jersey, Connecticut, Rhode Island, all of them are going to need a federal bailout, and they're all going to get it. And it's probably going to be 100-year, zero coupon bonds financed by the federal government. That's why they're running hot. That's why they keep the printing down, because they know what's coming.
Mm-hmm.
And that's what's coming.
Well,
and they're going to keep printing and monetizing until you want to say, well, where does it end? And again, great conversation with my son in a car, just turned 13 years old. And I'm like, well, everyone's trying to figure out when that ends, when that bubble pops. And historically, it actually pops when there are pitchforks and torches on the White House lawn and on the governor's lawn. And I don't know what is going to catalyze that. What is going to inspire that? Last time that we had a really upset public was in the 1970s when we had inflation. I'm not sure how we can have inflation, but we do know that if the government is going to stimulate and the economy post-COVID takes off, we may have that real flavor. And there's a deglobalization that persists at the same time. We may have the ingredients for inflation. Yeah. Again, 3 careers from now. So that's why I'm bullish here to January. I'm going to reevaluate then. But I believe in a blue wave intermediate, we have a real problem. If it's a red wave, it's probably going to last a lot longer.
Yeah, the red wave to me is
probably won't have that inflation.
The red wave to me is an interesting one. And I mean, if you just look at what the market didn't quite like today, is McConnell says, "Hey, look, we're considering a $500 billion. $500 billion is still a lot of dough." But the street, it'd be interesting if you went back to being in the room with all everybody again. I mean, like at when you can literally see it. You walk around, you talk to everybody. I don't want to name names of anybody, but you know what I mean. And did people on Monday really buy stocks because they thought it was going to be a blue wave? Because obviously, if it's got this red component, you would have to say you wouldn't want to buy them. And if the red component means that you don't get as much stimulus right away, then I would say that that's negative on the margin if you were of the blue wave camp. Now, I'm not of the blue wave or the red wave camp anyway. I do the quads and the signals, right? So I'm going to do what I'm going to do, but trying to think through the incongruence of what I just said.
Wow. I do think about what happens in that air pocket between if we don't get any stimulus. And then they ask me, what if Trump loses? So we just get nothing until Biden comes in. I believe that you are underestimating how much trouble Trump is in personally and professionally if he loses. He will sign anything to pay favors off to make his post-presidential life less miserable. So I think that, Pelosi could come out and, we want 10,000 checks for everyone. And Trump will say, how about 20? And that's what he'll do. So if he loses, he's in an incredible political, financial bind. This is a really unique situation.
Yeah, I hadn't thought about
that. So
I
believe that we will have stimulus then, and they will be able to get what they want done then, and then another New Deal after Biden comes in. So I think that we're very likely to see stimulus no matter what post-election. And at minimum, they're going to talk about it. So, and as we've seen, talk can move markets. So between that, the COVID virus, but we have to be really careful about how to trade on the positive momentum winners. Teladoc, I had a guy come up to me. I'm in the pits this weekend at the go-kart race. All right. And a guy comes up to me. I got my car parked there. Okay. So he's looking over my car and asking me about it and stuff like that. And he goes, I just got myself a new Porsche. And he does talk like that, by the way. and I was like, well, what do you have? I got myself a 911. It's got a convertible. And my wife says we should buy a boat. And I said, boats are just money holes. And he goes back, he goes, yeah, but I made so much money trading stocks. I own this Zoom and I own this, a Peloton. He goes, this trading thing's so easy. I should have done it years ago. And I was just like, of course, I turned to Max and I'm like, note to self, I've seen this twice before. So there are a lot of people who have no business making a lot of money, who made a lot of money. And usually how this ends.
Yeah.
It ends not nice. So so I think that the setup for a meaningful momentum shift from those COVID winners to the dogs is going to happen, and that would kind of sync up perfect with the January too, where the vanilla managers turn the page, they're done marking up their stocks for the year, and they say, well, what's next? And usually that move happens in December. You start to see it. But it might happen right away right now because we do have a gigantic sea of catalysts here around COVID.
Yeah, if you have,
it's very exciting. I mean, you have to take.
If those winners, particularly some Peloton or whatever it is, if you model it, so then what obviously you would do as a PM, you're a generalist. You're sitting there, you're like, well, who's going to accelerate in P&L terms, revenues and/or cash flows? If you don't have cash flows, which a lot of companies don't have any cash flows at all, it doesn't matter. But again, who's going to accelerate in narrative terms and numbers, and who's going to decel? It's almost mathematically impossible for something like Peloton in your model to accelerate, or Zoom for that matter, against its prior rate of change peak. So again, that's clearly how we will be thinking about those shorts. And those shorts won't, it's going to be, you take the elevator on the way up and it's the window on the way down, as you very well know. And that's going to be, I love that, because we're going to have tremendous asymmetry in the market. If it is the market that you say, then let's just take your word for it here. I know what to do with that. And I certainly know where we're going to be going on those names anyway. The models are the models, and the numbers and the expectations are what they are. And the dude that was telling you that definitely doesn't have an Excel. They don't have a model. You think that guy has a model on Peloton? Come on, no, absolutely
not. 10 years ago, I'd ask him about it. In 2007, right? I'd say, well, what's your model? What are your comps? What are you thinking? But now I know the answer. They have nothing. It's just that glom on theme name. It totally worked. I'm not selling it till it doesn't. And everybody's thesis is I'll be out first. So we're going to see some really interesting things here where these companies may put up really nice December numbers, and that'll be it. And it might even just be monthly numbers. And some of these diagnostics companies too that have gone off the hook. One comes to mind, QDEL is the ticker, QDEL. And this thing has just gone to the moon because they have a wonderful test, and it's doing extremely well. But over the next year, testing is going to very likely decline, and every year following. So you're just setting up for a gigantic pop like Peloton, placing all these machines. And then what's going to happen to all those machines? What happens to every single machine? It turns into a dryer rack. That's my t-shirt's wet, you put it on it. That's what it does. That's exactly, I got a whole gym full of stuff like that.
Dryer rack. All right.
So I think that's going to be the trade.
Yeah, we're going to go to the dryer rack here. The questions. We have about 10 minutes here, Mike, just to and there are a lot of stocks in here that you, first of all, absolutely nailed, and you're getting a lot of compliments on that. So first one from, hey, you're getting the Zurich, Switzerland fans all fired up. Michael asking that first question. First off, great call.
Oh, they should be. They should be.
Yeah, locally they can buy, Molecular Partners. Obviously, people can buy that if they're not in Switzerland. But first of all, Mike, great dual call on HZNP and TGTX. If you have a take on Biotech, I wonder OCUL, its recent offering was lapped up voraciously. And also he was asking about the XBI or flows and what you think about just the index, biotech index from here.
Well, I will submit that the worst outcome for drug stocks is a blue wave.
Really?
And the reason why, yes, and the reason why is that the CBO, the Congressional Budget Office, has already said that if the Democrats allow Medicare to set the price on drugs, which they can't right now, there's a line for government to say, we're not going to pay for that. And because the answer for government on any price is lower, and it will stifle innovation. But bureaucrats don't care about that. It's all about votes and so forth. So the trade is that they can get about $425 billion over 10 years of less spending. So now instead of a $2 trillion green package, they could have a $2.5 trillion green package if they got Medicare to set drug price. And so that is a fear in my view. Now, it may not happen. I'm just saying that it will certainly not happen if the Senate is red. But if it is all colors are blue, then those sort of things are possible for the drug space. And so a blue wave is negative for the drug space, net. It doesn't mean that it can't still work. There still is tremendous innovation, but overall, it's negative. And I don't want to talk about any hot stock du jour. Yeah. I will talk about the ones that I've talked about in the past or here. Yeah. I'm loath to give investment advice on single names unless I own it.
You mean that
or I'm short.
You don't want me to like lather with some lavender that nice top of your head, and we can rattle off 5,000 tickers, and you can be the second coming. Like we can make, if you want to be that guy, we got a spot here at Hedgeye, maybe.
Thank you very much.
What was it? Lavender. Anyway, here's a question. What I love about healthcare PMs, and I've worked with Tom Tobin forever, and what I find is like particularly in the hedge fund business, my experience, Mike, is that the quite literal most competent, smartest people in the room have to be our healthcare team, followed probably by our financials team. Because there's way too much shit to know. I mean, you just can't walk into it like like me. Like my first job was covering the retail and the restaurant stocks because an idiot could do that, right? I mean, so you do have to actually have some academic standing. So thanks for giving us that. Before we start getting into your experience. But Mario from Italy, this question I don't even know what some of the words mean. What do you make of the much heralded Adimab Adigio's COVID-19 antibody program, the thermal stability of custom-built proteins made for E. coli biofermentation? Moreover, any views on the disappointing news out of J&J's vaccine? Did I say all that right?
I'll talk on Johnny John's vaccine. You said it perfectly.
Okay.
And I bet if you said it again, it would come out completely different.
E. coli biofermentation?
I think I don't want to... I think that after we have 3 to 4 vaccines available by January, all the others really won't matter. I don't think that they're going to be financially viable because capacity will be had. And, they're going to go with the one they know, unless there is some nasty big tox problem in the data. And the probability is that we would have heard about it already. So we haven't. So I actually think that there's only going to be a handful of vaccine companies that actually benefit. It's not going to be all.
Yeah.
And then on the treatment side, I believe ultimately and quite soon, the only one that'll benefit is Molecular Partners, because there's nobody else that can beat them, nobody that can catch up, nobody that can deliver a sub-Q. Regeneron and Lilly will never be able to get that dose all the way down. I mean, you're literally, it's trying to inject a pitcher of fluid into your arm. It's just not going to happen. So, and then the development to change that could be years. And by that time, Molecular Partners will be the standard of care. So what's the point?
Yeah, like half the questions here, Mike, basically are giving you, backslapping you on molecular.
Oh, I want to go on Johnny John. So
yeah. They're all everyone apparently all Hedgeye viewers are along from Dublin to Nashville are along Molecular. Molecular Partners. Awesome. They thank you, so I'm thanking you. But on J&J, what were you going to say?
There's going to be on Johnny John. It's likely around the adenovirus vector. And that's what is causing some sort of inflammation in strange places. Your body doesn't like it. It recognizes it. It's a foreign body. And that's it. And you're going to get weird things that happen. What I like to call the purple eyeball event. And it's a rare, you go into any, it's true. It's true. You go into any large study, right, where you have tens of thousands of people, and you're going to get a purple eyeball. And that's it. And it can kill things because at least for vaccines, if you have a 1 in 10,000 death rate or a 1 in 1,000 death rate or 1 in 30,000 death rate, that's just not an acceptable vaccine. Right. Or 1 out of 30,000 lose their motor coordination below their legs, not acceptable. So, and right now we don't know if it is a random negative event that just happened by chance, and that could be the case. But we're seeing a recurring problem in the AstraZeneca data where the FDA has stepped out and said, hey, and this is my interpretation of it, hey, you are not telling us the full data. Mm-hmm. We are doing an audit. We are doing a lockdown. We are looking at this more closely. The FDA folks are not dumb. These are some of the smartest people in the world. And I've worked with them often, and it has been a true grace to work with them, including Gottlieb, who ran the FDA previously. He did a marvelous job.
That
very
guy's great.
Nice, very bright guy.
That guy's
he's a wonderful guy.
His daughter was on the same soccer team in Westport, Connecticut as my daughter. So that's my claim to Gottlieb fame right there. You know, like I'm a big climber, social climber, just trying to always fit in with all the famous people. That's why I really care about that. He is a good guy, though, really good guy. Super smart. Here's a good question. This is unrelated to healthcare. This is my kind of question for Mike T. This is Eddie from Ann Arbor, Michigan, one of my favorite places to have lost a very important certain hockey game in the 1990s. What are the two most important things you would tell a new PM who has no old wall baggage to worry about to be successful?
Oh, yeah. Most important thing, do not play to be right. And we talked about this before. Being right is the worst thing you could ever be. Ideally, what you want to be is sort of wrong and still make money. That's ideal. It's awesome. Very rare that they're like, I'm right and I made a ton of money. And that's it. So be very comfortable with not being right. Just make money. And that is it. In addition, look, as I sit at some of these large hedge funds, and I sat there for a long time, the attrition rate is probably high teens every year. And so as I'd sit somewhere for 10 years, I'd watch every single book around me fail and go away. And that's pretty much the case. About 90% of books, 80% of books didn't make it. And one recurring theme, why they didn't make it, is that they had a dusty, cheesy, undiscovered gem that everybody hated, but it's trading at 6 times, and there's just so much optionality that never happens, and you get fired. And that's it. Every single time. Yes, you get fired because your shorts go up more than your longs, and night-night. And that's it. And also on the short side, on the short side, and this is a quote from Steve Cohen. I haven't worked with Steve Cohen, but I've worked with a lot of people who have worked with Steve Cohen. And Steve says, and I took it to heart, he goes, the hardest part about trading a bad position is taking it off. And the only way to do it is to start taking it off, whether it's a long or short. If it is working against you, you don't know why, there's something else going on, you can always take it off. Locking your loss, throw your ego out the door. You can always short it again tomorrow or buy it again tomorrow. You wait for your moment. I've done that so many times, and my team has seen me do it, where I'll fiddle around with a stock where I'm like, I'll have a thesis and I'm just waiting for that to happen. And I'm watching this chart and I'm like, okay, it's here. No, I'm out. Now it's here. It's here. And then finally, aha, everything comes together. And I've actually tweeted a number of times about this around stocks that I'm interested in and involved in. I would say this is that moment. And I'm putting it on the trade. And, it takes some, it takes mental effort and discipline to not let your ego drive your positions of being right, but you allow yourself to fail a little bit, hit it big.
Yep.
And that's how it is. It's a bunch of small fails and then big things that tend to work. And that's generally how I've traded. But it's been a lot of attrition. And honestly, those 80% of guys that failed sitting around me was the best education I ever had. Many of them I'd try to help, and they just wouldn't get out of that crappy name. And once you see that happen 7, 8, 10 times around you, you're like, okay, I see a theme here. Note to self. The guy with the Porsche is loaded up in Zoom and Peloton, and whatever that guy's doing is getting fired. Don't do that. So here we are.
That's awesome. It's awesome, and it's such good advice. I mean, a lot of people listening to this do run money institutionally, and you can't learn that lesson enough. I guess on the long only side, sometimes.
And hold on, I wanted to add.
Go ahead.
I wanted to add one thing about Keith McCullough. All right, what people don't understand, and this is one of the many reasons why I have such incredible respect for you. You sat in my chair, and you survived what happened in '08. You were one of the very few that navigated it, and your firm didn't quite, and so you were sort of a casualty of consequence. And so many people were like that. But you're one of the very, very few guys that is running a product, but you succeeded and sat in our chair. And there's just so few people that do what you do and have the experience that you do. So when I come to talk to you about the problems that I have and what I'm concerned about, you know exactly what I'm talking about. And I'm not sure that all your clients recognize that. When they give you a hard time on your trade, left or right, or whatever, you sat in the chair. You're not just a blabbermouth. You actually know what this means. And you know what it's like to have white knuckles and sweaty nights.
Yeah.
So
So
kudos to you on that.
We troglodytes have to sleep under the bed sometimes, and go sleep outside, with the dog or whatever. I appreciate that, Mike. That's cool of you to say. And the reality is that if you sat in the chair and you're still sitting in the chair with us, I mean, we're learning together. Like, we're trying to. You can't learn enough about this game by playing it more and more and more. And the more you listen to people who play it truthfully and out loud, I mean, that's the whole point about Hedgeye, is that, you got to take a lot of losses to get your wins. But just don't take the losses that could end your market life. You got to stay in the chair. You got to stay alive. You got to stay in the game. And that's
Yes.
That was very well articulated.
And you have to approach it. You have to approach it as an amateur. Look, I did drug development. I've studied just about every drug in development for the past 20 years. And, I'm sorry, I got a call. Okay. So I've studied nearly every drug that's in development for the past 20 years of every major indication. And what I know is all the things, not just the things that succeeded, I know all the things that failed that all the new guys don't know.
Yeah.
You have to approach this all the time as an amateur, because I might have an incredible amount of working knowledge over the past 20 years, but I can be had just like everybody else. So you just have to keep yourself fresh. I'm an amateur, and that's part of the reason why I always term myself as a troglodyte. I am not advanced at this. I'm just like everybody else. I make mistakes. I get crap wrong, and we try to learn from it and move on. But as soon as you get the omnipotent mindset that I'm right or you just had a good run, you are going to get slammed every time.
Every time. That's the way that the game works. By the way, was that a picture of your son we just got a sneak peek of, like, without you trying? I think that was.
Oh, yeah, I'm sorry.
That's good. No, that's totally
Yeah.
cool, because we learned not only we learned a lot more about Mike Taylor today, which I think everybody appreciated, but we got the go-kart story. We now know what he looks like. We heard the story about the Peloton beside the go-kart, watching him ride. That was awesome, man. Thank you for, as usual, keeping it real and just giving people an opportunity to learn how the real game's played behind doors that a lot of people just really would have never had the opportunity to learn from to begin with. Thanks, man.
My pleasure.
All right, he's Mike T. Now you know why I like Mike T. If you didn't know last time, now you know. Thank you so much for, again, this is the end of the Investing Summit, but thanks for all your attention and all your questions. We had, the flow here has been, again, humbling, suffice to say, that you're spending so much time with us and, again, engaging with the debate and engaging with an education. So thank you very much, and we'll see you next time.